I know that prior to starting retention.com, things were not going as well for you. I think sometimes people think things are overnight successes.
There is no doubt in my mind that that is the way I want to live. I'm 100% certain. And I totally understood this argument that Tim Ferriss was making about like, you are rich if you have control over your time.
A lot of founders are like, I just need to raise money so that I can market, so that I can scale sales. Any investor doesn't want to just have you gamble their money.
And investors show up at your door and they tell some of the largest lies that have ever been told in humanity. Effectively, if you sign this piece of paper, then you'll be worth $25 million, which is complete bullshit. I am in a WhatsApp group with 150 founders who have over 20 million ARR companies. If you're listening to this, your dream is to get into that WhatsApp chat.
Hey everyone, and welcome back to the Startup Shortcut, where we show founders the best strategies to scale and to raise capital for their startups. Today, we've got a very exciting guest. We have Adam Robinson. Adam is the founder and CEO of retention.com and RB2B. Adam bootstrapped retention.com to $22 million ARR in just 4 years by helping e-commerce stores identify their anonymous website visitors and send them triggered emails. He launched RB2B in March 2024 to help SaaS companies identify anonymous website visitors and see their LinkedIn profiles in Slack entirely for free. Adam lives in Austin, Texas with his wife, Helen, and his daughter, Emma. Adam, thanks for being here.
Thanks, Michael. I'm excited to help, but I can't help with raising capital.
No worries, no worries. I think that your journey is really interesting. So I'm excited to open up the conversation. I think there's a lot that we're going to be able to cover today that's going to be giving perspective for people that are trying to scale their startups as well. What I'd like to hear just about first and foremost, just a little bit of an overview on your journey. I know that prior to starting retention.com, things were not going as well for you. I think sometimes people think things are overnight successes, right? I'd love to hear a little bit about your come up. And then if you want to give people as well a little bit of a rundown on retention.com, what you're doing there, more specifically RB2B and so forth. We'll go from there.
Yeah, so I graduated from college in 2003. I was a credit default swap trader at an investment bank called Lehman Brothers. And if you're kind of an old dog like me, you know that that was the bank that went down in the financial crisis, and trading credit default swaps is the job that, it was in the middle of it all. They made a movie about it called The Big Short, and they actually did a great job at recreating the environment that it was at the time. So if you want to know what that life was like, watch that movie. The first day I showed up in New York, my roommate was starting a website, and I was like, that's weird, because like it was 2003 and not everybody was doing that. Like the sort of late 90s tech bubble had burst. And I walk in, and on this app called Dreamweaver that you made web pages on, he's making this baby blue homepage and it said Vimeo. So like I watched that literally from like the room next door for many years, and it made me want to be an internet entrepreneur, whatever that meant. So yeah, it was wild. And the financial crisis happened, and then like everything changed about that job and that life. And I was like, now's the time. I got fired, and I was like, okay, so I could go try to like get a job that wasn't even as good as the one that I had, or I could take the money that I have saved and try to make an internet company with no relevant skills. Yeah. So I was able to avoid investors because I had saved some dough, but people are always like, oh, well, I can't do that. But I think like many other bootstrap successes that I have heard of, people have either started it as a side hustle, they've been running an agency at the same time, they've sold info products, to like a lot of skills that you can get from running simpler businesses than a SaaS that will really help you with your SaaS. So I saved money trading, but like you can also keep your expenses low and pay for your life doing something else. And it's just like, you just have to do more, but like, that's good for you. So anyway, back to my journey. So I think that people should do what I did, or should even aspire to do what I did, right? So the first thing I did was, and I fell into this, but taking a step back, I had gone to work every day in a suit and tie and like got into the office at 6 a.m. And the longest vacation I ever took was 4 days. And, this is just like, I was having a great time doing it at times, but I would read a book like Tim Ferriss' 4-Hour Work Week, the 37 Signals guys, like rework and remote. And I was like, there is no doubt in my mind that that is the way I want to live. I'm 100% certain. And I totally understood this argument that Tim Ferriss was making about like, you are rich if you have control over your time, which ironically, right now, I have zero control out of my time, but as much money as I've ever had. You know what I mean? It's a very strange thing that I'm like back in the middle of, but a lot of it isn't just because of my job. It's because I have a toddler and another on the way. It's like the combination of all of it is like what's so as oppressive as my Wall Street job was. But that was what I was setting out to do. I was like, I want a small, profitable SaaS company. Y Combinator people who like knock that approach, they're like, oh, run it like a restaurant. There's several things that I think are good about this approach. Number one, especially your first time around, it's like not that hard to create like a a 3 million ARR SaaS company that makes $1 million a year for you and your founders, right? And that's a pretty good life. It's not great, but it's good. I think everyone will find as they get older, it's just like really expensive to like have family and like send your kids to like good schools and stuff. And depending on where you live, you probably can't do it with like half or a third of that, but like it's a good start. But the point is, if you do that and then you get in a position where your business is self-sustaining and it can last indefinitely and there's cash coming out of it, that gives you an opportunity to then try to figure out something else that is bigger and better. Whereas if you try to figure out the bigger and better thing the first time, you're not good enough. So the stuff that I'm doing now is kind of crazy, right? Like I spent 80% of my time on founder-led content creation and marketing. We hired our first salesperson 5 months into running our business. We have a freemium offer, meaning like literally the value proposition is we'll identify people on your website, push their links into Slack. It's 100% free. And that whole combination of all of that, when I was starting as an entrepreneur, I would have looked at it and said, that's dumb. That guy's a narcissist. He's a neomaniac. He's just doing that, to get famous. He's not, doing it for business reasons. And freemium is a bad idea. He'll never make money. People are going to abuse it, like all of this, right? And through my experience of just studying, like we were in MailChimp's space, through studying that company so closely and like seeing how a 2 million ARR bootstrapped company changed their pricing model to a very disruptive thing. And at the time when Constant Contact was public, it was a public $100 million ARR company. And they ended up, without taking a dollar of capital, being 10 times more valuable than them over the next 10 years. Unbelievable. I have an intuition now that I just didn't before from like watching that, right? So I don't believe that there's a shortcut to that intuition. I think like every founder's journey, you will likely start experiencing a whole lot of success 10 years later. But like if you can get yourself to where you're not going to get taken out of the game fairly early on and like kind of control your ambition so that then you can like take these big swings with the house's money, is a good way of thinking about it. I think that's a great way to do it. And then you don't like, you're not just like beholden to someone telling you, here's a check, you can do this for another 18 months. Go ahead. So yeah, first company was called Robly Email Marketing. It was in the email marketing automation space. That's a very hard space. It's the second oldest space in SaaS. It's a sea of sameness. There's a couple dominant brands that like absolutely crush. And MailChimp is free and they spend $1 billion a year in advertising. And how are you supposed to be more free or better than that? It's just impossible. So I was trying to figure out through one strategy, which was this data mining strategy, we got to 3 million ARR with like 50%, it was a very light cash flow business. It was sort of shrinking by 1% per month. And then we had revenue expansion. So it was like shrinking by less than that, but the users were shrinking by 1% per month, which is not good, right? So like it was a good place to be incubating, quote unquote, like what we were doing, trying to figure out what was next. But like the emotional state of being stuck and having something shrinking when you're like in your late 30s, have a family and stuff, it's not great. So I spent a few years trying stuff and failing, which I think you have to do. That's my only interpretation of what this game is. It's like you are throwing spaghetti against the wall, seeing what people react positively to. Then it's like, okay, what is the minimal amount of effort I can put in giving them something, not even a product necessarily. If you can do it manually, that's even better. Giving them something and like looking at their face when they see it. If the signal remains positive, you just keep going further and further down the hole of like, developing a product. So yeah, one of the experiments that we did was like inside of Robly, I had heard this crazy idea that you could get an email address from someone even if they didn't fill out a form. And having owned an email marketing company for 3 or 4 years, I was like, oh, I could sell that to anybody with a website. This is like the biggest problem in email. Didn't know how to do it. Took 18 months to figure it out. Finally got it. Made it a feature in Robly. And then people were signing up for Robly, using the identity feature, downloading the file, putting the file in Klaviyo and telling me it was the best product they've ever used, right? So like very good, 10 out of 10 NPS score. Very good indication of product market fit when people are willing to endure a horrible user experience and still you have word of mouth. They're saying that they'd recommend it to a friend. So previously I'd been thinking about it like, oh, this is my way to decommoditize my super commoditized crappy platform that's like behind the market. And it didn't end up being the case. We should have spun it out and connected it to everything, which we did. And we called that Get Emails. And now it's 22 million ARR. It's great. It makes a lot of money. It's very profitable. And I did the same thing again. I went on this wild, sort of lost my bootstrapping religion, thinking that company retention.com was like a surefire unicorn. Like in September of 2022, we thought we had identified that large Shopify stores were the power users of this thing. And previously it had been self-serve signup, PLG, like a very light sales assisted PLG. And we thought that by honing in on these Shopify guys, the churn problem would be eliminated. And with the velocity that we were selling and the word of mouth in this universe of Shopify guys, we were just like, this is lights out. It's going to be like 50 million ARR, no problem. From 15 the year before, grew the staff. We actually got to 12 million ARR with 6 people. I recommend also doing, by the way, first of all, getting to 1 million is very hard and it's super manual and it's way more manual than people think. And everyone comes to me and asks like, what growth hacking should my VA be doing at, 10K ARR or something? I'm like, you need to have 1,000 conversations, keep improving your product, literally do stuff manually all day long. And then when you get to 1 million, you have not hired anyone, you can start thinking about like what channels you should start doing one-to-many out of. I think a problem that exists in the world is a lot of people are stuck in this like 1 to 3 range. Maybe their products are high churn. Maybe they just like don't have product market fit, but like the world makes it, possible to get there. And then you break out of that. And it was so painful to be in that 1 to 3 range. And your life is just hard. If you had the good fortune of bootstrapping, it's just like, it's desperate. I mean, I remember being there. And then you get some real traction and investors show up at your door and they tell some of the largest lies that have ever been told in humanity. They're like, effectively, if you sign this piece of paper, then you'll be worth $25 million, which is complete bullshit, right? Like you're not. But like, it's very hard as a person to not feel that way. So few people just wait way too long to do that. The reason I think you should wait until 10 million ARR to like run it super lean is because if you can make it till 10 super lean, you can do anything that you want with your life. And investors take that off the table. If you wait till 10, you could snap your fingers and sell that business for 40 or $50 million in 1 second. You and your founder are probably each making $1 or $2 million per year, which by the way, if you're venture backed, you have to be a 500 million ARR company to have all in compensation at or above $1 million. You're probably making a quarter of that at 250 million ARR, right? So I am in a WhatsApp group with 150 founders who have over 20 million ARR companies. They're some of the most successful SaaS founders in the world. If you're listening to this, your dream is to get into that WhatsApp chat. Like a third of the conversations are these founders asking how to ask their boards for raises. Isn't that crazy? Of companies that they started themselves. And then they're like sending around these salary tables. And I literally can't believe it. I'm just like, how do you even live in New York City making this? That's like another part of this investor trap that if people just waited and were patient, and like maybe it's a little extra pain in the beginning because like, yeah, I guess if your first bite at the VC apple, they let you raise your salary from like 80 to 120 or something. That feels a little good for the time being, but like it is a trap. And then I think another problem people don't realize is that when you raise money at a valuation, you are not allowed to sell until it's 3x that valuation. So there's this other problem where it's so much easier to get to 10 million and sell for 50 than it is to get to 50 million and sell for 500, right? Like it's not 10 times easier to sell for 50 than it is for 500. It's 100 times. Because there are thousands of companies that will buy your company for $50 million. And the higher up you go, the pyramid is like this. Once you get to a couple billion, there's like 6 or 7 people who can acquire you. I don't know if you've heard of Clay, but like I love this team at Clay. They just raised at 500 million. I think that's awesome. But I also think they're screwed because now they can't sell that company for less than $1.5 billion. There's only a few people that can buy it. I think it's so disruptive. They might be in the running to get bought for that. What I worry is traction remains. They do a round in a few years, like Apollo just did at $1.5 billion. Now they can't sell for under like 5 billion. And then their growth stops and everything is totally screwed. Anyway, these are all of the reasons why I think people should wait and do what I did and just bootstrap till 10 million ARR. The goal should not be unicorn. It should be 10 million.
Lots to unpack there. I mean, I want to call out a couple of things and actually dive a little bit deeper. That's a phenomenal rundown. I appreciate the background because I think that, you brought up so many important points that I just want to spend a little bit more time on because first off, congratulations on the new child on the way. I wanted to say that.
Oh, thank you.
That's
the most important thing.
Yeah, the most important thing before we get back to business. But I think that, So the first thing that I want to talk about is the small before the big. Okay. We talk to probably 150 to 200 startup founders a week. A lot of people immediately are trying to raise capital, right? They think that they're building the next multi-billion-dollar thing. It's going to solve world hunger. It's the next thing. And investors are insane for not wanting to get involved with their company that's doing zero. What's crazy to me, and what you said, I think in a really good way, is that having some source of income, even if it's a service, even if you're doing something in a different industry, a different space, while you're building this, it gives you just so much more breathing room rather than going all in on a startup and trying to immediately jump to a unicorn. Not only does it give you breathing room, but it gives you perspective, which it seems like that's really what's leading to a lot of the success, your ability to identify the retention.com, the feature within a product, really. That's essentially what happened there. So I guess, why is the hype all around becoming a unicorn? I know that's a silly question, but where did that come from initially, do you think, where people think raising capital is the only way instead of just doing business, being profitable?
It just seems so crazy. I listened to this thing on Twitter last night. There was Elon Musk and Donald Trump, and I'm sure people hate both of those characters. Elon's like, my values are safe cities, pro-environment, safe borders, deregulation, some other very like common sense things. And he's like, I just can't believe this is like a far right position now. I feel like this is kind of like my position with tech companies. It's like, I just think businesses should make more money than they spend. And like, if they do, then the owners of those businesses completely control their own destiny. They are like on a path of liberation that like not even dream about, right? It's just amazing that it is so contrarian, right? Yes, there's a camp of bootstrappers. It is not how most people think that it can be done. I just want to be like that 4-minute mile guy, like yelling that like, you can do it this way. Look, I'm doing it this way. Okay, I didn't start yesterday, but everybody starts at zero. You're going to be working for probably 50 more years, right? Like we're going to live forever or whatever. Investing the time and getting very skilled at this craft and like doing it in a way to where your long-term risk is as low as possible. To me, that's the smart way to do it, because you can just keep swinging bigger and bigger. And like eventually the swings are very compelling. You hear about less than 0.1% success stories and they all come out of the venture. All of the big companies, they will have gotten venture funding for some reason or another. Like, okay, hardware businesses need it. If you're trying to like do like vertical takeoff and landing vehicles to like replace the taxi system in New York, okay, like go raise $1 billion to do that. Most of these SaaS companies that people are starting are not that. So I got called out on LinkedIn a few weeks ago. The guy said I wasn't a bootstrapper basically because I wasn't destitute and starving in my parents' basement. And I got really upset about that. I was like, we let go of 18 people on Friday and our business was already making $700,000 a month. Why did we do that? Because it was inefficient to have them. Like the company was set up like a growth equity company and the market conditions had changed and we needed to operate for efficiency. And we have these other growth businesses in the B2B side that we're like investing in for growth, right? We sell in the Shopify space. Every other company that does is venture backed. They're all dealing with the same changing market conditions and churn. None of them can do that. They all have to keep building bullshit for this market that quite frankly sucks. And they do not have the same standards of return on capital that we do. I just think it's like an accepted way of operating that is unacceptable. In my opinion, it violates basic business rules. Like we have a guy in kind of the B2B space that I'm in. It's not a direct competitor, but it's this company called Warmly. And like people watch what I'm doing and they sort of try to copy it. So like he's working in public, like in a very different way than I am. They're growing every month, right? But his ARR is at like 1.4 million and they're growing 10% per month. So they're adding like $14,000 a month, but it's been consistent 18 months in a row. He goes and raises $6 million. He's hired 15 people and he's trying to hire another 7 for a company that is growing 14,000 in monthly recurring revenue every month. Who's telling this guy to do this? Like we're growing at 50 and I'm laying off people. That whole machine that's causing this kid to think that this is the right thing to do is just wrong. It's annoyingly so for me.
I completely agree. There's a few like pretty big stances that we have in terms of like our perspective. So I agree with the fact that there's some bad ways to raise venture capital, but then there's also some really good ways. And that, the hardware, like you said, there's biotech. There's certain companies, obviously, that need to raise money in order to do it, unless they come from the Lucky Sperm Club, per se.
Yeah.
However, I agree. I think that people are doing it way too early. I think that they have the wrong expectation going into it. And I also don't think that they know what they're getting into. I think that is, it's causing causing a really big issue in the startup ecosystem. And I think it's going to actually have a negative impact on a lot more. A lot more is going to come from it. So our philosophy is—
Talk to me. What do you mean when you say that a lot more is going to come from it?
I think innovation is going to slow down in general. I also think that what happens is now people are blaming VCs. There's this weird dichotomy of like VCs are now shifting more into, it seems, your stance actually. Like they're looking for companies that are a bit more focused on revenue and margin. I actually think VCs moving closer to private equity in terms of how they're deploying capital, which I think is good. I think though, yeah, it makes a lot of sense. And what's interesting is founders are almost spiteful about that. You know what I mean? Like I'm seeing some people confused at like the fact that VCs want them to focus on revenue and focus on profit. Again, this all has nuance based on the industry. But like our whole philosophy here is if you make your company attractive, there's two things you have to focus on. It's perceived value, AKA brand, which you're phenomenal at. We'll get into that during this conversation. And then two, it's traction, AKA actual revenue, customers, product market fit. Money is a non-issue to raise. Because Adam, how many investors could you go to right now that would throw money at you to get involved? I know you won't, but how simple would it be for you to go out and raise literally whatever amount of money you want practically?
This is my argument for staying bootstrapped. By the way, one more thought about that. So like one of the biggest arguments to taking money is we'll help you speed it up. I think that could be true like way later, but I think it's not true when you're in like the low single digit ARR. The thing that speeds you up is making your product and go-to-market motion better. And like, you don't want to put capital behind something until it's lightning in a bottle. I think that's one of the big mistakes that gets made. That's why I love just staying super lean and just trying to like stay super focused and just make both of those things, right? Product, go-to-market, like in one or two channels, and that's it. Like fire. And then you get to the point where you're paying yourself over $1 million a year. Your product is literally fire and it's got this great traction. It's got this great trajectory. Then you go to investors and you're like, I don't need you. But if you want to help me build out these 3 other channels that I have proven out already because I like tested them, then do it. Not to pick on Max again, but like I'm reading this thing that he put out last month and it's like, oh yeah, we like crowdsourced a new brand vision. So we're going to be a revenue orchestration platform. And then we did this $6 million deal and we're putting BDRs and demand gen and like whatever in place to sell this. That doesn't even make any sense. Check out his LinkedIn. He puts out a monthly update. Like, I can't believe what I'm reading. I met him in person. Hopefully he's watching this or not. I don't know what I hope, but you know, he's telling me all this before it sort of happened. And he's like, dude, you're like really low energy today. I was just like, dude, like, it's because I'm depressed at what you're telling me. It's like, I'm listening to what you're saying. And I'm just like, that's going to be so much heartache for you and all those people that you're going to hire.
Founders think capital solves problems. And sometimes it doesn't if you do it too early. And it definitely doesn't if
Creates
like, yeah.
large problems, like huge problems.
Yeah. Yeah,
you
no,
know?
I agree. And I actually think one thing you said there that's really valuable is you said that using capital to like amplify existing channels, things that you've already tested and validated to some degree, right? I feel like that's a very common mistake that I hear. A lot of founders are like, I just need to raise money so that I can market, so that I can scale sales. And it's like, okay, any investor doesn't want to just have you gamble their money. It's not a very compelling reason. If you validate it, I think 10 million ARR, people need to raise money. I think that's obviously the dream scenario, but even $1 million ARR, that's a Series A level amount of revenue now that's technically required for most industries. Even that level of validation is so much more compelling than just like trying to raise first. If you just do the hard work, like you said, invest a little bit more time into finding that product market fit, doing the dials yourself, as you said, where it's uncomfortable as hell. Absolutely. It's going to make it. It's going to make it so that raising money actually happens for you if that's the end result that you want. Or you don't need the money.
Not only raising money, I hate to say it this way, but like done the right way, it will actually make you rich like way sooner at a much higher probability. All of these dollar amounts, they're much higher the other way, right? But I'm telling you, it is much better to make $2 million a year for 10 years and then sell your business for 50 than to make 200 grand for 10 years and at a very low probability get a $1 million exit. And then you get $50 million of that very low probability exit because you did so many rounds in the meantime. It is a much better life to be in that first scenario. And like, that's impossible for people to get their head around. What's impossible is really like, whether it's 40 or 50 or 60, there's like a 90% chance you can sell that business. If it's an EBITDA business that you're paying yourself millions of dollars every year, there's like a 90% chance you're getting out of that within like 3 or 6 months of you deciding you don't want to do it anymore. Or by the way, you could hire a CEO if you want. There's this whole probability weighted financial thing that people are just lost on. And then there's the happiness factor. Like I'm telling you, not having investors is the greatest thing in the world because you can do crazy shit and you don't have anyone. What do you have to do in marketing to make it work? You have to do stuff that no one else is willing to do. My weapon is doing stuff that venture-backed companies can't do. It's pretty simple. I share things that no one else could share because they're afraid of their investors, basically. And I'm a decent storyteller and I've been doing it for 18 months and I've gotten a knack for like what people want from me. I get walked up and it's like, how do you write that about like your product not working? Two reasons. I know no one else can write it. I know that that's the experience people are having and no one else is writing about, right? So like whenever you're the one person doing something, it will cut through. And I think that's only one of the liberating things about not having investors, but it's a major one. This sort of founder-led marketing becomes how more and more businesses will succeed. I'm not saying it's the only way, but I'm saying I am 100% sure that more and more of the early successes will be because of this in the coming years.
I agree. I think it's just delaying the time in which you raise capital. Or, some people think that they're building a venture scale business, like a business that needs to be backed by VCs. When it's like, no, you don't have to go that route. So I think that it's important to just highlight the fact that like, while there are business models, and I actually like the venture capital business model, I'm friends with quite a lot of VCs that I think do really good work and might not have as much the limitations that I think some of the negative experiences out there happen. It's not the only way. And for whatever reason in the startup ecosystem, it's the only place I've ever seen people who like don't focus on just actually making money. And it's really confusing. There's a strange way of thinking about it. So that's why I really wanted to have you on is I think it's so important, cash first. Focus on getting cash in the door. Make a profitable company, and literally anyone will give you money if that's what your goal is.
Right.
Like if that is what your goal is.
Otherwise, even better. By the way, the problem is if other people give you money, then they put caps on the money that you can give yourself. Right? Like
tell me more about that.
I have yet to hear a counterexample. If you take a meaningful check from a venture or private equity firm, you cannot distribute capital to yourself out of the business. That's not what they're in the business to do. Their funds are not set up to receive the capital. It will feel great. The other side of it is in most venture deals, there's this idea of secondary. Oh yeah, we'll just take secondary as we like. Okay, some people get to take an amount of secondary that makes them rich out. That is hardly any based upon my experience. Mostly it's like $1 and $2 million, which sounds like a lot, but it's not a lot when that $1 to $2 million is literally just to subsidize food that you're putting on the table for your kids in between the next time you have to go beg for another $1 million. Right.
Yeah.
The counterexample is if you can bootstrap 20 million ARR, you can actually get a fund who specializes in investing in founder-owned, profitable and growing businesses where they're not giving you capital to put into the business. They're giving you capital to buy your equity and just let the business keep growing how it was growing. That, in my opinion, if you're going to do it, is what you should do. You should create a business that doesn't need outside funding. You will eventually get to a scale where someone will walk up to you and say, okay, I'm going to give you $20 million for 20% of your company. And like, you can just keep doing what you're doing.
I completely agree. And again, I think the important thing to call out for anyone that's listening to this is like, we're really talking about SaaS. We're really talking about software businesses that you don't need a lot of capital to scale in beginning. I don't think you need a lot of money to start and like get to like that million ARR, like nothing exorbitant, nothing you couldn't get from friends and family. If you're just a little resourceful, an angel, or like you can get creative. I think that of course there's different examples.
Like we were talking about in the beginning, another source of income while you are validating. A big mistake I think people make is they overcommit to this idea of their company, especially the first time around, and they just get way ahead of themselves. I did. So like, I'm sure everybody else does. It's like, oh, like I need to like form an LLC. It's like form an LLC 1 year after you get paid your first dollar, right? Like if you're still doing this a year after someone pays you your first dollar, oh, we need an office. Less so after COVID, but like before COVID, that was like an identity thing. It's like, if you didn't have an office, then you weren't real. Right. And there's just a million ways to mess that up. Man, not diving into this thing 100% until there's very strong evidence that it's the way you want to spend your next 10 years. It's hard emotionally because you're like, oh, I have an idea. Like the entrepreneurs are the heroes of our cultures, right? Like you want that to be you. But like, I'm telling you, unless you get to that point, which is so manual of product market fit, you're not going to want to be on that journey. It's going to end badly. That's just the reality of it.
One of the ways that I actually heard, this is from another conversation I had the other week with a VC. He invests in deep tech and like biotech, like up and coming pre-seed, early stage, writing $500,000 like or so, like average check size. And he was just talking about capital efficiency. That's the term he used. Even in those industries, even in the ones that typically are more capital intensive when you're starting, you need to still be efficient with the capital that you get and have meaningful milestones that you're accomplishing to even tie that back to what you're building. So I think, again, like I think more and more what you're saying is the trend moving forward. It's like you either don't need capital, you get capital only when you are ready for it, or maybe you don't get capital from the conventional routes with venture capitalists. Maybe you go with just a high net worth individual that sees a profitable company you just built that you just want to cash out a little bit, and they're just doing it from more of a strategic perspective. I think it's a very good frame to reshift into.
As a part of our go-to-market motion, I'm going to start evangelizing this. I'm going to try to make a religion around bootstrapping 10 million ARR. So do you know who Russell Brunson is? So this guy, kind of like what he did with ClickFunnels was amazing. It was like he did a really good job, basically content, community, and software all in one. And he was really doing a good job of giving people a new identity of being a funnel hacker. And, they were basically buying info and the software and, they would whatever. So I look at him and where he was in that ecosystem. And then I look at sort of the opportunity I have now with the products that we're building for B2B. I think that it's similar. And a lot of these early stage founders, we can help them with software, but very easily I can provide content and community to help them up the rungs of the 0 to 1. And if we can get thousands of people believing in these concepts that I've told you, that like, dude, if you can just not hire anyone to 1 million ARR, just you and your founder, and then hire like 3 or 4 people, 1 to 10, that is the life that you want. Trust me, right? In your wildest dreams, like you would have never thought of the sort of overall freedom and happiness that like running that company will provide you, right? So I think it's great because like right now the dream's unicorn. It's so much easier to bootstrap $10 million than it is to have a unicorn SaaS. Like, I know it is. I've done it. I'm doing it again. I know for a fact. It's like get skills on your first one and then like use the cash from the first one to hit a bigger one. And then, if you could just sort of get your lifestyle in a position to where you're not being oppressed by this thing and you actually like the game and like you don't need to sell anymore. There's so many reasons to pursue this way. So
I agree. One thing I want to pivot to a little bit here that I think is important. I want to talk just a little bit more about actually operating retention.com. I also want to talk a little bit about our B2B. One thing that you said earlier I didn't realize was, I can't remember you said, what was your email software that you had previously called?
Robly, yeah.
Robly.
Very, very forgettable name. Robly email marketing.
Amazing. What I thought was so valuable that a lot of startup founders struggle with, especially when they're trying to figure out product market fit, is they fall in love with their idea of the business. So exactly how you said, I am in this extremely saturated space. I'm going to create this feature. That's my differentiation within this space. But you realized really quickly that you're like, this feature isn't a feature. The feature is the business, right? And I think that is such a testament to your ability to just not have an ego in how you're building the business. It's like what matters is your customer, not your vision of what it should be. It's like optimizing for that. So the reason I provide that context is that's a really common issue that we see. People think that like the way that their business is scaling is the only way. And sometimes they miss these little golden goose opportunities per se, where it's like, oh, lean all the way in, pivot just this little bit, and everything can change. How do you feel you identified that? Any tips for any founder that, might be feeling that they're in that saturated space and looking for competitive advantages or pivots? And
I think it's just the experience of the journey of feeling different things that worked and didn't work. The first thing that sort of worked and got us to 3 million, I thought that was going to keep going and it just didn't. And then nothing else we tried worked for years. It's just reading the SaaStr blog, the Y Combinator blog, reading about product market fit, like getting a real understanding for like what type of business, what type of SaaS I actually wanted to run or whatever. Literally what I said was true. I had read on a blog that a great indicator of product market fit is that people were willing to endure a horrible user experience and still give you a positive NPS score. When we were giving people, the NPS score of this feature and I knew how they were using it, I was like, I'm never going to like with the stuff that we're working on right now, with the stuff we're going to launch in a year, it might be big, but like with the stuff we're working on right now, they're all high churn product category, meaning like if you can create a system of record, like CRM or like QuickBooks or like email marketing where it's like the database is stored in there. Those are very low churn product categories and the companies can get massive because it's just like the revenues stick and people get out. I'm basically selling leads, which is like the total other end of it as a SaaS. And the problem is, even if they're great leads, there's going to be people who can't do anything with the leads. And there's 10 reasons to cancel leads. The companies like retention.com is like at 22 million ARR. Like maybe we can move up market and get it to 30. I don't know. It's not getting to 100. That ecom business that we have, our B2B, super high churn, bigger TAM, much higher velocity, same churn problem, but I think it can just be bigger with far fewer humans because of the TAM that it's in. That's the sad thing about these things. The great thing about them is you can run them in a way to where they're just super profitable companies. Very lean. Like a lot of times these higher churn spaces, your very serious, well-resourced competitors are not attracted to because they're high churn. The real SaaS people won't waste their time on it or whatever. And again, I'm not advocating to like shoot for high churn. It's my nemesis. I hate it. Like every day of my life is spent trying to lower churn. Eventually, I think I'll have a lower churn product. There was this product market fit, lightning in a bottle. And then the biggest mistake that I made when trying to scale up retention.com was not realizing it was in this high churn product category of selling leads and intent data to a high churn buyer persona, which is SMB. I thought the metrics would look like Klaviyo and they just don't. So if they did, the company be at 100 million ARR right now. And, I'd probably still be on this podcast.
No, it's really cool, Adam. And trust me, I understand that. I had a Facebook ad agency. Like that was the first company I started, service, Facebook ads, and literally the hardest because you generate leads, but then they're like, these leads aren't good or they don't work the leads or, it's this constant issue that I imagine is probably similar to what you've experienced. I actually downloaded our B2B. We used it for a while. Still do actually. It's a solid product. It's really, really cool. What I wanted to talk briefly about is I want to give some tactics here just as we're wrapping up for like marketing in general. I think that, I'm a marketer. That's kind of like my background. It seems like where you really excel as well. How should founders be marketing themselves nowadays? What strategies do you think they should be doing from 0 to 1, 1 to 10? What do you feel is most effective there? I'm just really curious.
The dream state is you get in a position to where your prospects have a desire to pay you for advice. That's an absolute dream state. That usually requires you having built that audience up over years in advance. There's not really a shortcut to just snapping your fingers to being like, oh, I'm going to make a SaaS for firemen. And then like the next day, the firemen are lining up to give you advice about being a fireman. That would be the dream, right? Since most of us don't have that, I think that you should read Dave Gerhardt's book called Founder Brand and think about the message that he's saying, right? Like you just need anything to set you apart in the beginning. And most companies were started for a reason. And there's usually a story behind that reason. And that story, if told properly, is often very compelling. And it's even more compelling when it's coming from the person who started the company's mouth. At the same time that like all the social networks are like going more towards interest-based content and video. And it's just making what happened with the Kardashians and like whatever else, like prevalent in B2B. Long story, I believe that in almost every case, really it's like harnessing the power of organic social media is the most capital efficient way to take any product to market, physical or software. How do you do that? I think if you're starting out, the most straightforward way is just founder brand. This working in public thing, I think, especially if you happen to get early traction, it's just interesting to people because the same reason people watch Shark Tank. It's like, can you put out a mini Shark Tank about your company? Don't blur the numbers. Like people want to see what's going on, right? Like I share numbers, which people love and like whatever. So that is a super easy way to get going. If there's a way where you can find incentive alignment between a group of people and your company and harness user-generated content out of them, that is magical as well. Clay and us, we have these lead gen agencies where they grow their business by posting on LinkedIn. And by posting about RB2B and Clay together, it's actually the best LinkedIn content because it's this great, wild how-to workflows and they're super cool and everything. And they have an incentive to do it. So like that is another way that you can harness organic social content. I think without question, organic social that your audience wants to take in, it just intuitively makes sense. Like that's so much more powerful than a paid ad that they didn't ask to see, right? And there's also this like kind of loop that occurs now where if you can put out a post, like LinkedIn's my platform, right? Because my audience there. If I can put out a post and my normal post gets 30 likes and this one gets 1,600, I know the platform wants to show that to people. So my bid for the advertising unit to show that is going to be so much stronger because of that relevance than someone else who's like showing a photo of like some chubby guys trying to like whatever, give, venture debt to someone or something, right? So to summarize that, the power of being able to put ad dollars behind posts that you already know the platform wants to show, it's like the ultimate equalizing force. What am I trying to say? Man, I wish I would have started sooner. Everybody starts at zero. If you can find your voice on social media, it is the most powerful force if you're interested in starting companies that exist in the world today.
I think that's really valuable. You're referring to thought leadership ads on LinkedIn, right?
The other platforms, you can kind of do the same thing. You can see if an organic post bangs, and then you can put ad spend behind that post. It doesn't have to be your post either, by the way. If you can sort of accumulate these UGC people, then you can amplify their best posts too.
I think that's super smart. I'm not sure if you know Dan Martell. He does that quite well. I think in terms of like how he's built his brand. I was listening to a video he made where he's doing, I think, $24 million a year now, just selling his brand, essentially. It's really, really incredible. Same thing, high margins, etc. And I think everyone just needs to, make money again. To have the focus of building a company be making money, it shouldn't be that counterintuitive. Let's just put that at the forefront again, and more exciting, more compelling things are going to start to happen. Only other thing I actually think would be good. Have you ever read the book Ready, Fire, Aim? I'm curious.
I have not. I've heard about it.
Yeah, I think you should. I'd be really curious on your thoughts, because what he talks about in the book a lot is like how there's different stages, similar to what you were just describing. So 0 to 1, 1 to 10, 10 to 50, 50 to 100. I can't remember the author's name on the top of my head, but he broke down basically his lessons that he'd learned after scaling like 10 companies to over $100 million, and the emphasis for where the founder has to put their focus. It really helped me. Hopefully it helps people that are listening to this, because I think it was one of the more valuable books I've ever read. So let's wrap up here. I can't believe we're already coming up on an hour. This is unbelievable. A question I like to ask everyone, Adam, just because we're in the AI revolution right now. Do you have any big bets when it comes to AI? I know this hasn't really been a topic for us here today, but like, do you think anything crazy is going to happen over the next few years? Like, do you have any predictions?
I think over the next few years, I'm not really predicting anything. It's like, so I think this large language models hit, and like everyone thought they could kind of do what I'm doing, but like with no work, which is not proven to be the case. The best art is still created by a human, and that is what this is, right? It's like, it takes an unbelievable amount of time and creativity to create the best art. Sadly, you can maybe use that tool sometimes, but like the authenticity and the humanity is like what is cutting through, and it's what always cut through. I do think that there's, in terms of like very rote, repetitive work, like tier 3 customer success tickets, it's an amazing tool for that. It is so great. So I think we're in the early stages of that transforming, and maybe some like very repetitive sales stuff too, but like high touch, emotionally intelligent for many years. I think a different type of model is going to need to come out, which generally the breakthroughs don't happen like one year after another.
Back to back, just life-changing break. Yeah, no, definitely. That makes a lot of sense. Any final pieces of advice while we're just wrapping up here for any founder that's listening?
Please bootstrap 10 million ARR as lean as possible and don't take money. Please, for your sake. It's not for me that I'm saying this. I gain nothing. You gain everything.
Well, there you have it. Adam, this is a really great conversation. I love your perspective. It's very contrarian to what's going on. It's really in line, very similar to what I believe as well. And hopefully it's going to let the startup founders that are listening to this make some decisions that might be a little bit different than what they were maybe thinking initially. So I appreciate your time today. Thank you, everyone who's hung with us this entire time. If you want to follow Adam, I'm going to drop the links below so you're able to follow him on LinkedIn. He's got like 90,000 followers there. So I'd do it if I were you, because I follow him.
Got a couple followers.
It's got a couple. And with that being said, I'll see you guys on the next one. Bye.
Take care. Thanks for having me.